What strategies reduce IRS audit penalties? Imagine facing an IRS audit and worrying about penalties piling up. The good news is, there are ways to lower or even avoid those penalties altogether. Let's walk through some proven strategies to keep your finances safe during an audit. First, understanding the common penalties is key. The IRS can charge accuracy-related penalties at 20% of the underpayment, and if you significantly underreport income, you might face substantial understatement penalties. In the worst cases, fraud penalties can hit 75% of the tax owed. Knowing these numbers helps you see why taking steps to prevent penalties makes sense. One of the easiest ways to avoid penalties is to request a first-time penalty abatement. If you have a clean compliance history and have filed all your past returns, you can ask the IRS to remove penalties for late filing or late payment. To qualify, you need no major penalties in the last 3 years, all your current returns filed, and any taxes owed paid or arranged for payment. Many people overlook this option because they don't know it exists, so asking for it can save you money. Another effective method is to use the reasonable cause defense. If you missed a payment or filed late because of illness, natural disaster, or relying on incorrect advice from a tax professional, you might qualify. You must show you acted in good faith and took reasonable steps to meet your obligations. Be sure to gather supporting documents like medical records or correspondence with your accountant before submitting your request. Without proper documentation, your chances of success drop. Procedural mistakes can also lead to penalties. The IRS requires written supervisory approval before assessing certain penalties. If they did not follow this rule, the penalty could be challenged and possibly removed. When requesting penalty relief, ask whether the IRS followed proper procedures. If they did not, this can be a strong argument for abatement. If your assessed tax is reduced during an audit, the penalties tied to that tax should also be recalculated automatically. Always verify that penalties are adjusted accordingly after a tax reduction. Failing to do so is a common mistake that can cost you extra money. Accuracy-related penalties are often challenged with a reasonable cause and good faith defense. If you relied on professional advice or believed your reporting was correct, you can argue that you acted honestly. Many taxpayers accept these penalties without question, but remember, the IRS has to prove its case. You have the right to contest it. Filing extensions and setting up payment plans can also help. If you cannot pay your taxes on time, requesting an extension prevents the failure to file penalty. But remember, an extension to file does not extend your payment deadline. To avoid failure to pay penalties, setting up a payment plan is your best bet. Many taxpayers miss this and end up paying unnecessary penalties. Finally, working with a tax professional can make a big difference. An experienced CPA or tax attorney knows exactly how to challenge penalties, gather proper documentation, and navigate procedural rules. Trying to handle these issues alone often leads to costly mistakes. Always respond quickly to penalty notices and provide detailed documentation. Waiting too long or submitting incomplete information makes it harder to get penalties reduced. Being proactive and organized can save you money and stress. By following these strategies and avoiding common pitfalls, you can better protect yourself from IRS audit penalties and keep your financial health intact.